Information shared on the following program is for general information purposes only. It does not constitute legal, tax, investment, or other advice, nor is it intended to recommend any particular investments, products, or financial instruments. Always seek advice from your financial advisor, attorney, or accountant with regard to investment, legal, or tax questions.
Welcome to the WorryFree Retirement with your host, the author and creator of the WorryFree Retirement himself, Tony Walker.
Well, hello and welcome to the WorryFree Retirement. I am Tony Walker, your host, and you are watching the only television show in the country dedicated to helping savers worry less about money. You know, before I was getting ready to go on today, by the way, today's date, we like to share the date because this show is pre-recorded and then rebroadcast in many of the markets throughout the country that we now have. Today's date is December 2nd, if you can believe that already, December 2nd, 2013. And we share that date because sometimes financial information changes. Here I am talking all know-it-all about something going on. For all I know, you know, we could have some catastrophic event going outside the studio. So we got to keep it all in perspective here. But, you know, before I went on, one of the directors here and I were talking, and he mentioned something about this concept of savers. And do savers like to spend money? It's a great question, and what I'm trying to do is reframe the whole concept and the conversation of this three personalities of money. So let me make sure you understand what a saver is in my eyes and what I've seen over the past 30 years of working in the financial trenches. The way we define a saver is, first of all, it's a personality type. It is someone who is more concerned about the return of their money than on it. A saver personality is one who doesn't like risk, doesn't like to take a lot of gamble, doesn't gamble with their money, so to speak. They like certainty. They like game plans. They like structure. However, what we don't want to confuse is the fact that savers, of which I'm a saver, quite frankly, also like to spend money. There's nothing wrong with that. So we don't want to confuse the issue of a saver, picture some miserly person who doesn't know how to enjoy the money, although sometimes savers, I have to encourage them to use and enjoy the money because I believe philosophically that's what money's for. It's just a commodity. It's just to be used and enjoyed. And let's face it, when they pack you out of here, out of this old world, you ain't going to take it with you. In fact, I heard a guy say once, you know, you see those funeral processions marching down the road, they ain't practicing, folks. So yeah, we're on a limited time here, so I think it's important that we have a philosophy of not taking things too seriously, take our money seriously, keep costs down, don't put things at risk, and then let's try to use and enjoy the money. By the way, we like to show a couple of things for the markets. The Three Personalities of Money website. If you are saying, well, I don't know if I'm a saver or investor or speculator, it's very easy to do. You can log on to that's the number 3, personalities.com, and we've created this ingenious 4-minute test. If you'll notice, it's right there in the middle of the screen. It just says take the test, and you can find out very quickly what your predominant financial personality is. And now what we have with this test, after you take that and you say, hey, I am a saver and I want to learn more about this new concept of being a saver, and more importantly, I want to find people or advisors who can relate to me and tend to be working with me and not for the financial world. We're going to talk about that in a minute. And by the way, for those of you watching out in the markets, I want to show you our books. I've written 3 books over the past several years, and all 3 books, all of them, WorryFree Retirement, Don't Follow the Herd, and the Three Personalities of Money, are going to be absolutely free to the first 10 folks that go to TonyWalkerFinancial.com. You got to log on to TonyWalkerFinancial.com. The first 10 people to request the books, this is a $49 value. These are all absolutely free. We'll mail them postage paid. But here's what you got to do. When you go to the website, you click on Contact Tony. You got to give us your name, phone number, and mailing address very clearly so we can get these to you. Name, phone number, mailing address, and just say, hey, Tony, I want those 3 free books. Every market, we're going to send them out to you because we want you to get acclimated and energized about this new and exciting information which appeals to savers who are wanting to worry less about money. Very good. Well, of course, you know, the WorryFree Retirement would be just amiss if we didn't introduce America's favorite financial sidekick, Mr. Aaron Orander. Aaron, how you doing, buddy?
I'm good, Tony. What would you do without me?
I don't know. And I noticed you've got a Tony Walker sweater vest. That means you have actually made it to the big leagues. You've passed the test. I gave you a sweater vest. You're in, brother. So.
All right. Thank you. It's like, do we have like a secret handshake now? Or
No,
something?
not yet.
Okay,
It ain't got to that
okay.
point. That's several months down the road. Hey, I know you've got, I've got older children, but I've got to believe December 2nd, you got a 3.5-year-old at home. Is the Christmas bug already happening at the Orender household?
Yeah, it's Christmas bug. I guess that would be the best way to put it. We spent this last weekend putting up the Christmas decorations, and he enjoys. We've got a tree that rotates.
Oh, that'll last about a year. I've had one of those before, too. Those and the Christmas tree lights built in. My wife always gets it. I said, honey, it ain't going to last. Sure enough. And then a strand goes out. What do? You got to tacky it up by adding a strand. But good luck with that rotating Christmas tree light thing. Hey, I'm going to do this year. I did it last year, and it actually went over very well. My granddad, who I talk a lot about on this show, here was his idea of Christmas shopping. He would get up in the morning for everybody. He'd literally get his checkbook out. He'd write checks to all the kids. We'd usually spend the night over there or go that day. Hand us checks, payable to us, and we'd open them up and look at him. He'd always say the same thing. Is it the right color and does it fit? And we go, yeah. And I'm going to do that with my kids again. I did it last year and did some shopping. I told my wife, I said, if you want to shop, you can. I'm giving them cold, hard, tax-free cash. Because, by the way, we might talk about this on the show. People need to remember this is tax-free money. You can give your kids up to certain amounts, and they love it. I've never had them argue with a check yet. So what the heck. Hey, we're going to be covering a lot on the Elmo. I'm going to, so you got to be ready over here. Let me get back to the audience. Be ready to put some articles on there, Aaron. This is going to be good stuff we're covering today. A lot of information. One of the things before we get into taxes and Social Security, a lot of stuff we're going to cover today, it's kind of come to my attention, and these articles are of late in my industry coming out quite a bit. Of people out there like yourself, I meet you at workshops all the time. Again, I've done this for almost 30 years. I have hundreds of workshops. I see thousands of people over the last several years. I talk to people on the TV show. I do another TV show besides this one that is live in the Louisville market. So I am out there in the financial trenches, folks, looking to help savers. And what I've realized is the financial world really doesn't want you to understand who their advisors might be working for. It's an interesting phenomenon. It reminds me of the Wizard of Oz when they finally yanked back the curtain, on the Oz, and there he is. He's just a person. There's nothing magical about anything he does. But there's this big differentiation between people who are registered as investment advisors, which I am. I'm an independent registered investment advisor. My offices are based out of Bowling Green, Kentucky. Work up in the Louisville area, southern Indiana as well. But really, I'm an investment advisor independent of any broker-dealers. But then you have the broker-dealer world, okay? And they're under different standards. May sound a bit confusing, but let me share this first article with you. This is titled, FINRA Urges Brokers to Put Clients First. Isn't this a strange title, Aaron? Okay, Aaron's going to show to you, and I'm going to read just a couple of things here. Listen to this. It's unclear whether the Securities and Exchange Commission will advance a regulation to raise investment advice standards for brokers, but they should make the cultural shift. Okay, let's go on down here. What they're talking about here, just leave it up for a second. An investment advisor like myself is held to a very high fiduciary standard by law, by the SEC. Many brokers that work with big brokerage firms out there are not. I know this sounds crazy, but look what it says way down there. If you slide down, Aaron, there's a small part where it says, Mr. Ketchum is the latest industry executive to urge brokers, listen to this, folks, to act in the best interest of their clients. All right, thank you. We're going to show you another article in just a second. This is almost bizarre, I would think. If you're a consumer listening out there, don't you imagine that any business, I don't care what it is, any retailer, whoever it is, your dentist, your doctor, your plumber, I don't know, wouldn't you imagine that when they step foot in your house or when they ask for you to write a check or they're offering a service that they're acting in your best interest? Wouldn't you think that's just normal? But it's not. In the brokerage world, the brokerage firms out there are working many times in their best interest. So one of the things I encourage you to do, many brokers are very ethical, don't get me wrong, but they are not held to the same suitability standards. This is a fact. So what I would do, if you're not currently working with someone who is an investment advisor, consider an investment advisor to give you a second opinion, because the investment advisor, such as myself, has to put as their fiduciary responsibility the client's best interest. In fact, I like to tell people that I don't work for the financial world, I work with the financial world. My obligation is for my clients and what's in their best interest. Real quick before we go to break, one more article here. Look at this one here, Aaron, if you can put it on. Merrill Advisors taking new approach with clients. Now, this is about Merrill Lynch. Again, came out in Investment News magazine. Basically, it's saying that they're looking at behavioral issues with their clients, something that's very uncomfortable for brokers. If you slide over to the far right, Aaron, you'll see it says Merrill's new approach to the advisor-client relationship comes as it moves towards a business model of more holistic thinking. All right, thank you. So folks, you've got to understand something. It's you against the financial world. This is a dogfight out there. You're the consumer, there to provide the products and services, but it's up to you, unfortunately, to make sure that the people working with you are working in your best interest. Not only are we going to be talking about products when I come back, we're going to be talking about tax planning and also how you can really get nailed on Social Security and the taxes that come along with it. I'm Tony Walker with the WorryFree Retirement. You stay tuned. I'll be right back. How would you like to find a trusted advisor in your area who practices and preaches the same safe money solutions that I speak of on this program? Well, you can by simply logging on to TonyWalkerFinancial.com and clicking on the Find an Advisor link. Once there, just fill out the confidential profile and submit it. This free service is available to savers who are serious about safeguarding their money. So what are you waiting for? Stop worrying and log on to TonyWalkerFinancial.com.
Yeah, Tony, right now I've got one of my annuities that I'm taking monthly payments out of it, and I just wanted to know about the tax consequences. Should I have taxes taken out of that annuity on a monthly basis, or would it be better if I paid quarterly estimated taxes?
That's a great question. You know, last week, if you watched the WorryFree Retirement, I covered the whole issue of just taxes in general. As you know, if you're watching this show, there's three main products that savers really love. Those are FDIC bank products, they're short-term government treasury bills and bonds, and again, fixed annuities, fixed indexed annuities, fixed interest annuities, and what we call immediate annuities. And as we've talked about savers and trying to understand this personality, we also know that savers have to gravitate towards things that reduce cost. And the problem with annuities is sometimes people don't understand, although they're tax deferred, when you start taking money out, or at death when you leave these annuities to someone, there are tax issues to be involved with. And sometimes there's tax advantages, sometimes there might be disadvantages. Now, this particular question gets into what my grandfather affectionately called mailbox money. Real quickly, a good history lesson on my granddad. He worked for the same company for 43 years, retired in 1978. I know you've heard this, but it's a good one, and it sets the stage. And he left that company never to work again with something he called mailbox money. That is guaranteed lifetime income he could never outlive. And this assured my granddad that whether the money was enough or not, here's the key. People always say, well, will it be enough? Doesn't matter. It was guaranteed. It was a level income that he and his wife Hazel could bank on. So that's really the main advantage. There's many advantages of annuities, but the main advantage of an annuity is when you're ready at that time in your life for like granddad to kick in lifetime income, or what he called mailbox money, annuities really fit the bill well. So let's imagine now, we're going to go through two scenarios. So let's kind of take a look at the whiteboard, and there's really two different ways you can access this income. This is called annuitization. Okay, and if we can kind of pan over, or you can take income from these new hybrid annuities on something called the income rider. So what we're going to do is we're going to walk you through, let's say we're just talking about this gentleman here that was just on Tony in the Trenches. Let's say he hasn't taken income out. So he's saying, okay, can I annuitize that annuity? That's the way they've always been done. Or what if I take money out of the income rider? Okay, so right now we're just going to focus on what's called annuitization. So anytime you hear the word basis, that means there are contributions or premiums into the annuity. So let's imagine this gentleman has put in $100,000 over the course of whatever 10 or 15 years of his investment horizon. And let's just say it was a deferred annuity and he left it alone. So after a certain period of time, whatever that is, it doesn't matter. We're just illustrating here. Let's say that annuity now has $450,000, a lot of money. And he or she says, okay, I need income. How can I get my income? So we slide down here, and under the annuitization method, his mailbox money, maybe we calculated in this example to be $20,000, okay, a year for life. All right, so let's just focus on that a minute. So what the annuity company is doing is they're taking the principal and interest, they're figuring out an interest rate, and they are going to pay this money for the rest of this gentleman's life, just like my grandfather enjoyed with his pension. Now, how are the taxes figured? Let's imagine this is not an IRA. It's what's called a non-qualified account. It's hard to determine that because we'd have to know his age and the exact amount of money, but it's something called an exclusion ratio, and this is real important, and this can have some true tax advantages. So if he were to annuitize this, what they're going to do is some of the money, the basis, which was $100,000, is going to be paid out tax-free, and then some of the money, which is the gain of $350,000, gets paid out. This way, this gentleman would spread his taxes out. In other words, the full gain of $350,000 wouldn't be taxed immediately. So really, really important. That's why before you buy an annuity, folks, please find out the experience of the advisor. These advisors, including myself, get commissions up front. That can be a one-and-done deal. They sell the product and they're gone, but who in the world is going to sit around and figure this out for you? Only a retirement specialist that's done this a while and understands these products. That's the value of the person selling the annuity, not the annuity itself. That's just part of the equation. They also need to know how to work with these products when you need income. Let's slide over to income account. These newer income accounts are what we call lifetime benefit income riders under annuities. How do they work? Let's take the same example. So let's say this gentleman had one of the new hybrid annuities. He put in 100. It's worth $450, and now we come down, and let's just say for illustrative purposes, it's the same thing. If he took it under the income rider, it's $20,000 a year, and again, let's imagine it's a non-qualified account, and you'd say, is it all taxable? Here's the problem. Yes, this full amount is taxable until he takes out his gain of $350,000. Then when he reaches his basis of 100, it's going to be tax-free. So folks, here's the moral to the story. Again, all annuities are not created alike. Anytime you see somebody that says, I don't like annuities or I hate annuities, keep in mind that they probably don't understand much about annuities, or that particular individual tends to work with investors, and a lot of investors don't care for annuities. Not going to understand that. Annuities are a very, very safe play. Annuities are meant for very conservative investors like my granddad. Annuities, especially the fixed variety, an immediate type like we're seeing here, or even these new hybrid indexed annuities, are geared towards people who want to protect their principal and they want that guaranteed lifetime income with minimal fees. So again, folks, if we can be of any help, if you're down in the Southern Kentucky area, I personally can meet with you at no cost or obligation. We also have people throughout the country that would be happy to meet with you to discuss your situation with no cost or obligation. Just log on to TonyWalkerFinancial.com, and what you can do there, if you're wanting to find an advisor, click on Find an Advisor in your area, and again, someone will contact you at no cost or obligation to review your situation. Well, you think taxes are bad in income and investments? Just wait till you see what I've got to share with you about the taxation of your Social Security benefits that many of you thought was going to be tax-free. Stay tuned. I'm Tony Walker. I'll be right back. For nearly 30 years, I've made it my life's work to help savers worry less about money. And now I invite you to personally contact me to discuss your situation to see if I can help you. It's very easy. You just log on to TonyWalkerFinancial.com and click on the Meet with Tony link. Or if you like, you can attend one of my free financial workshops. As always, there's never any cost or obligation to meet and discuss your situation in private. So what are you waiting for? Log on to TonyWalkerFinancial.com. Well, if you've been watching the show for the last couple of weeks, we've also touched on this idea of when to take Social Security. Real hot button, hot topic. Any magazine you read, you're probably getting mailers to attend workshops on when to take Social Security. I've already warned you time and time again, folks, be careful with these workshops. They can be very informative, but you've got to understand there's no free lunch. These folks are wanting to meet with you. They're going to ask for you to take off your financial clothes. They're going to want to talk to you about everything. So be sure you know a lot about these people and that you can trust them before you get into these meetings. You might want to contact somebody like us or one of our contacts if you have any questions. Again, we'll share that information in a second. But what's more important about Social Security and when to take it, which is important, I think the big bugaboo, though, is the taxation of Social Security. This is what most people don't understand, and this is where you could pay literally thousands of dollars of unnecessary taxes on your Social Security. Aaron, if you're ready over there, let's show this little chart on the Elmo. This is the issue, folks. When you retire one day, the government, and we're assuming here a married filing jointly tax filer, the government is going to come in and they're going to look at all of your income. It's called your provisional income when it gets to Social Security. Now, in this example, we see that you might want to slide that over just a tad, Aaron, see where we need to get the taxable, see, the other way, keep going part the other way. There you go. Social Security, see that percent of Social Security not taxed? If you make under $32,000, all of your Social Security is not taxable. That's a great thing, right? But look what happens. As you start showing more income showing up on your tax return, again, we're imagining you're retired or you've taken Social Security and you're working, it doesn't matter, it's all income. 50% of the Social Security could be taxed if you make between 32 and 44, but look at that. If you make over $44,000, 85% of it could be taxed. All right, thank you. So what we have this chart right here. All right, you've got the earnings here, and notice as they get higher and higher, there's going to be more taxes. And most of you, and I know this for a fact because I meet you all the time, you have no game plan whatsoever in terms of when to take Social Security, but more importantly, how to mesh these other assets that are going to be coming out that are taxable. So what I'm going to do, we can slide over here to the left, Dennis, I want to show you on this part of the board this concept of provisional income, okay? And what that means is when you filed your taxes with Social Security, here's what they're going to look at. They're going to want to look at 1/2 of your Social Security earnings, all right? So let's say you made a total of $30,000, you and your spouse. They're going to include $15,000 there. We're trying to figure out how much of Social Security is going to be taxed here, folks. Let's say you also had maybe a pension, okay, of another $15,000. Let's say you also had some municipal bonds, and the interest on that was 10. Would you think, hey, tax-free bonds, I'm safe, right? Well, maybe not. And let's finally say maybe you had some mutual funds that paid some capital gains and dividends of another 5, all right? So what you do is you add all that up, so that's 30, 40, that's $45,000. You with me? So you, in this case, you would come over here, all right? It's over $44,000, your provisional income. That means that 85%, I'm going to put Dennis to work here, 85% of the 30 is subject to taxes. Yeah, America's favorite financial sidekick just whistled over here when he saw that. Look, folks, I mean, we've talked about this on the show. There are things you can do to save money. If we save more money on taxes, that means we get to enjoy more money. But many of you do not have a game plan. You're out here meeting with people who what I call are product peddlers. They're nice people. They may have great products. But as we just saw in that last quote by Nick Saban, the famous coach at Alabama, I love that concept, what he says there. It's not always about winning. So you think winning is making a bunch of money. That's only part of the game. The real winning comes with the process, how to use and enjoy that money that you've worked so hard to create at the least amount of taxes and cost, fees, interest rates, insurance premiums, and as we can see here, folks, this gets into thousands and thousands of dollars, and this is just one angle. So here's my advice to you. What I would do, if you're in the Southern Kentucky area and you would like to meet with me personally, please go to TonyWalkerFinancial.com. For no cost or obligation, I can meet with you in person. I review your situation either by phone or in person. There is no cost or obligation. Better yet, if you're outside the Kentucky area or Southern Indiana area, I also work with people in the Southern Indiana area. If you're outside those areas and say, hey, is there somebody other than you, Tony, that is trained in some of these safe money concepts that I can sit down with? Number one, I don't have an advisor, or number two, maybe I'm starting to think my advisor is working in the best interest of the financial world and not my world. I want to find that person. You would just simply go to TonyWalkerFinancial.com. There's a blue box located over there that says find an advisor in your area. That's all you have to do. And what will happen is someone will call you and over the phone or in person discuss with you your personal situation. Remember, folks, there's no cost or obligation. Also, for those of you who are saying, you know, I love this kind of information, how come I've not been hearing it? Because Wally World, or the investment world, doesn't deal in these safe money concepts. That's not what they're about. Wally World is about investing and growing your money. They're not interested in how to show you how to use, enjoy, and protect it. So to learn more about this concept of the Worry-Free Retirement and more about my philosophy and the 30 years in this business, I'm going to make this special offer to you again. Let's put up the 3 books that I've written. We have the Worry-Free Retirement, we have Don't Follow the Herd, and then we also have my latest book, The 3 Personalities of Money. So for those of you who are interested in this type of new way of thinking and it sounds like it's resonating with you, go to TonyWalkerFinancial.com. You're going to click on Contact Tony, and you're going to say, hey, Tony, send me those 3 free books. The first 10 that go in all of the markets will get these 3 books. We'll mail them to you postage paid. There's no cost or obligation, but we do need your name, your phone number, and your complete mailing address to get all 3 books. Well, I'm Tony Walker, and I hope you're enjoying the program. I'm going to close out with something in just a second, so you stay tuned. I'll be right back. How would you like to find a trusted advisor in your area who practices and preaches the same safe money solutions that I speak of on this program? Well, you can by simply logging on to TonyWalkerFinancial.com and clicking on the Find an Advisor link. Once there, just fill out the confidential profile and submit it. This free service is available to savers who are serious about safeguarding their money. So what are you waiting for? Stop worrying and log on to TonyWalkerFinancial.com. Well, welcome back to the program. If you would like a free Social Security software analysis of when to take Social Security, go to TonyWalkerFinancial.com, click on Contact Tony. We'd be happy to run a free Social Security analysis to help you determine when to take Social Security and some of these other issues like file and suspend and all these other strategies you've been hearing about. Well, in the meantime, I'm Tony Walker. Hope you've enjoyed the program. I look forward to seeing you next week. And in the meantime, you make it a good day and you be worry-free.
You've been watching the Worry-Free Retirement with financial advisor Tony Walker. To ask Tony a question or to find an advisor in your area, log on to TonyWalkerFinancial.com.